Direct method is important, so that's for sure. But indirect method is currently 95% of US companies using it. But good news is only operating activity section. The other two sections, did you notice that is the same? Identical. So only this section is different. You flip the page back and forth, it's the same, right? Investing activity, finance activity, same? Yeah, it is same. All right. Okay, now you know what we are doing. All right, so come back here. So we crossed out one successfully. So next one is accounts receivable, right? So what's the top line of the income statement? Top line. Sales, right? All right. Now, here's the other information, right? And then come to here. We start with the operating activity. Please do not look at this. I provide too much of a hint here. Normally, you don't have this. Normally, right? San Jose State, they're not going to give you this. Berkeley, they're not going to give you it. They just give you a blank sheet of paper. So what you have to do, first thing, put the title, put that down O, I, F, and then put that down this. That's your structure. When you put that down O, please leave some rooms. When you put that down I, please leave some room. When you put it down F, please leave some room. Using your common sense, I mean, just common sense, whether you took accounting or not. I mean, we talked about that. What would be the AdWords operating activity, biggest cash inflow? You all said that his paycheck from IBM, right? Mm-hmm. This company, the company, operating activity, what would be, I mean, most company, 99% or probably 100% company, the biggest cash inflow operating activity is cash inflow from their customer. So don't worry about that. Every single cash flow question, first line is cash inflow from revenue. Or yeah, sales. You don't. By the way, you don't have to say the way I said that. You can say this way: cash received from customers. How about that? I like that better actually. Cash inflow. Word revenue is already kind of what? What's the smell? Accrual smells there. Word revenue, right? So I just simply say cash received from customer. So let's think about that. So how much total cash received from customer in this company for the year? What year I'm talking about? Year 2002, right? Year 2002. So anybody has an answer? How much is total? Just one number. Alice, you have a number? 98,000. Good starting point. But I'm sorry, Alice, it's incorrect. But you have an excellent starting point. Alice, start right away 98,000. Very good. I like that. That intuition is something I cannot teach you, but at least got that, at least. But that's not the answer, unfortunately, because what's the question? Please pay attention to my question. The first word I use, cash received from customers. And Alice right away said 98,000. That's a very good starting point. But I cannot take that as an answer, I'm sorry. The reason is cash. How come? You will say that sales figure. Did you notice that I'm using the word figure? Sales figure is just a figure, not necessarily all in cash. How do I know that's not all in cash?
Because you still have accounts receivable.
Very good. Very good, Andrew. So look at the accounts receivable. 2000 at the end of 2002, you still have $2,000 as sitting there as an accounts receivable.
9,000. The difference you mean? Or that?
Oh, I'm sorry, 9,000. 9,000. I'm sorry, 9,000. Still sitting there. Why accounts receivable still have balance? Because you have not collected cash from who? Customer. Oh, customer. When you said customer, you already imply, which means you sold something to them, right? That's why you call them customer. Oh, you sold something? Oh, that must have been here, this figure. How do they relate to? By the way, accounts receivable, what was the beginning balance, 2002? That's the ending balance 2001. It was 8,000. You started with $8,000. And then during the year, you recognize, I using word recognize, not realize, recognize $98,000 worth of sales. Is that debit or credit?
It's credit.
Credit. What was the debit of the same journal entry?
Accounts receivable?
Yeah, I'm
Or-
talking
or
about
cash.
chapter 2 of accounting 1A, okay? Right? Debit, receivable, credit sale. Do you remember that journal entry? So you accumulated how much during the year? $98,000 worth of sales. When did you make this $98,000 sales? When? 2002. From what time? 8 o'clock in the morning, January 1, 2002, to 6 o'clock p.m., December 31, 2002. How long did you take this to make 98,000? How many days? 365 days. What was the beginning number? 0. How many months? 12 months. How many weeks? 52 weeks. How many hours? You need a calculator. All right. So 98,000. So I'm trying to teach you accounting 1A concept. Income statement meaning that those accounts are what? For the period of time concept. Period. Meaning it takes 365 days to come up with that number. As opposed to balance sheet, 9,000, 8,000 accounts receivable, that's point in time concept. Okay? You need more help, it sounds like, looks like. Timeline, all is work. That's what I'm talking about. Standing on December 31st, X1, that's the, you can say January 1 of X2, $8,000 was AR balance. Standing December 31, X2, your AR balance become 9,000. During, for the period concept, $98,000 was recognized as
Sales or
sales
revenue.
What? Don't forget, where's our destination? What are you searching for right now?
Cash.
Cash, only cash received from
Customers.
customers. I'm getting itsy bitsy getting closer to your brain answers. I'm trying to. I'm urged to say the answer myself, right? But I'm trying to suppress me saying it. I'm trying to go inside your brain, switched on. That. See, here's the reason why. Did you really understood accounts receivable? Especially those who got A+ from me. Did you really understood accounts receivable? I mean, we're talking about metacognition. Do you really know what you thought you knew? What you thought you knew, including myself. I may be a teacher teaching accounting for a long time, but a lot of things that I don't realize that I truly do not know. Right. Anyway, so because of time, let's go through this. Okay, accounts receivable increase meaning more cash sales or credit sales? Credit sales. More credit sales, what happened to cash? Less cash. So therefore, 98,000 minus $1,000, 97,000. That's one way of doing it. Or you start with the $98,000. That's the during the year, but you start with $8,000. So that was the beginning balance. Minus you adding $9,000. You did not collect as a cash. You add those. So 98 minus 8,000 plus 9,000 will be 97,000. That's the answer. Oh, Did I switch the two?
Because yeah,
Or okay, I just simply put that down what's given to me. The beginning balance of a T account 8,000, ending balance of 9,000. What usually go here? When do you debit accounts receivable? What usually go here? When do you credit accounts receivable? Please answer my question. When do you normally debit accounts receivable? When you have credit sales, right? What's the opposing journal entry? Credit sales. When do you credit? When you
get receive cash.
That's right, when you're collecting cash from those customers who had received your goods and services earlier. So what's given here? Income statement. If you're looking at the income statement, what's given? Sales revenue is given. So I'm going to just plug the sales revenue, 98,000. Algebraically, 8,000 plus 98,000, does it come out to 9,000? Heck no. What's the missing piece?
Like a cash.
So 8,000 plus 98,000 minus, has to be minus, has to equal to 9,000. So solve for x, please.
116 minus 9,000.
Is it 97? 97 must be cash received. Okay. You want me to prove that to you? So the cash received is 97. Okay, forget about this now. I got the answer. This is all cash. As far as the receivable goes, you had how much to be collected at the beginning.
8,000.
So that must be here, part of it, right? To be collected. So you add this, and then 9,000 you have not collected, so it has to be subtracted.